Hey, have you heard about this so-called AI war being pitched as your ticket to wealth? Well, let's take a closer look at what's really going on behind the scenes. So, I've been digging into investment pitches for years, and honestly, very few grab you by the collar like the big secret on Wall Street. Hosted by Porter, who's a seasoned market watcher, and joined by Jeff Brown, a tech investing guru, this presentation drops a real bombshell. America's apparently locked in a high-stakes, under-the-radar war for artificial intelligence supremacy, and it's about to reshape everything, your portfolio included. They're calling it a crisis bigger than 9/11, the 2008 crash, or even COVID-19, with trillions of dollars and millions of jobs on the line. The pitch? Well, get in early on a handful of stocks tied to this AI war, and supposedly, you could ride a wave of generational wealth. It's a heck of a story, but does it actually hold up? Let's unpack it. The presentation weaves a narrative around President Trump's policies, tariffs, executive orders, massive tech deals, and claims they're all part of a coordinated push to beat China to artificial general intelligence, the holy grail of AI that thinks smarter than humans. It's pitched as a winner-takes-all race with America's economic and geopolitical future, really hanging in the balance. They point to some absolutely eye-popping investments: $500 billion from Apple, $1.4 trillion from the UAE, and Nvidia's $500 billion chip push. Even Trump's wild talk of annexing Greenland or strong-arming Ukraine for mineral rights gets tied into this grand strategy. The urgency, well, it's hammered home act before July, when Trump's rumored AI action plan could send these stocks soaring. As someone who's seen plenty of market hype, I'm intrigued, but, also a bit skeptical. The AI race is real, but is it really this dire? And are these stocks truly the golden ticket everyone's hoping for? Well, here's my take. Porter and Jeff argue that America's restructuring its entire economy to win the AI race, especially against China, which they describe as a juggernaut controlling about 70% of rare earth minerals and filing 6 times as many AI patents as the United States. They compare it to World War II when factories cranked out tanks and planes. These days it's all about energy, think nuclear and gas. Production like chips and robots, and transmission meaning grid upgrades. The stakes? Artificial General Intelligence, or AGI, which could self-improve exponentially, leaving the loser, well, in the dust forever. They call this the singularitarian effect, and they say it's why Trump is supposedly bypassing Congress with executive orders to fast-track mining, drilling, and chip factories. They point to some real moves: TSMC's $100 billion Arizona foundries, SoftBank's $500 billion data centers, and Trump's orders to reopen coal plants and cut mining permit times from years to just weeks. It's all about securing the spice, that is energy and rare earths, to power AI. China's DeepSeek AI model, which allegedly wiped out $600 billion from Nvidia's market cap in a single day, is their so-called Pearl Harbor moment. Proof, they say, that the threat is, right here and now. There's truth here, but it's dressed up in some serious drama. The U.S. China AI race is legit. China's 2017 AI plan and patent surge are well documented, and the U.S. is pouring billions into AI via private firms like OpenAI and Nvidia. The energy crunch is real too. Data centers could eat up 25% of the U.S. grid by 2030, according to the Energy Information Administration. Trump's push for domestic resources, oil, gas, lithium, makes sense when you see China's grip on 90% of rare earth processing. Policies like the 2020 Critical Minerals Strategy and 2024 drilling orders back this up. And the singularitarian effect? Experts like DeepMind's Demis Hassabis say AGI's 5 to 10 years off, not months, and its impact is honestly still speculative. The presentation's claim that losing means no second chance ignores how tech races evolve. Russia caught up on nukes after all. Don't get me wrong, the resource angle is spot on. AI guzzles electricity, and rare earths like neodymium are non-negotiable for chips. Trump's deregulation, like overturning the Chevron doctrine, could unlock U.S. reserves worth billions. Though honestly, $100 trillion is a wild guess. But calling it a national emergency feels a lot like a sales tactic to light a fire under you. My gut says this is a real trend, but the doomsday vibe is, well, definitely overcooked. So, the pitch centers on 3 pillars: power production and transmission, and 5 stocks to play them. They name 2 outright and tease 3 in reports, urging you to buy before July's AI action plan. Here's the lineup. BWX Technologies. What it does is build small modular reactors, or SMRs, for the Navy, and now interestingly for AI data centers. Why does it matter? Well, nuclear's the future for AI's power needs: scalable, reliable, and yeah, no carbon drama. BWXT's up 89% in 2 years, but Porter sees a decade-long growth story. My take? Nuclear's a smart bet. SMRs are flexible, and BWXT's got a moat with its Navy contracts. Treasury Secretary Scott Bessent's push for new reactors adds even more tailwinds. But nuclear's slow. Permits and build-outs take years, even with deregulation. Still, BWXT's cash flow and low debt make it a solid pick, though honestly, epic gains might take some patience. The 100-year-old money machine. So what does it do? Well, we're talking about Texas Pacific Land Corporation, or TPL, a 130-year-old firm that owns 1 million acres out in the Permian Basin. It leases land to oil giants and collects royalties, all with just about 100 employees. Why does this matter? AI data centers need cheap gas, and honestly, TPL's land has it in spades. Building centers right at the wellheads cuts transmission costs in a big way. Porter says it could, quote, double or triple on a big tech deal. Here's my take. TPL's a cash machine, high margins, no drilling costs, it's kinda hard to beat. The data center at wellhead idea is actually pretty clever. Microsoft's already looking at similar setups, but, TPL's stock isn't exactly cheap, and energy prices can swing pretty hard. A double is possible, but tripling feels a bit optimistic unless AI demand just explodes. Coal's comeback. So, what's the story here? We're looking at a debt-free coal miner with 2 billion tons of reserves and 17 mines. Why does this matter? Coal is cheap and reliable for AI's immediate power needs, at least while nuclear ramps up. So here's my take. Coal's definitely a bold call. AI's energy hunger could, revive it in the short term, especially with Asia's demand really spiking. But honestly, green policies and renewables are looming large, so coal's a pretty risky bet beyond the next decade. Symbotic. What they do is make AI-powered warehouse robots, and they're already in like 25 Walmart centers with 400 more planned. Why does this matter? Well, robots streamline manufacturing, which is absolutely key for AI's supply chain. Jeff predicts a 3 to 5 times jump in the next 24 months. The AI toll booth, what's that? Well, it's likely Rambus, which licenses memory tech to chip makers like Micron to fix AI's so-called memory wall bottleneck. Why does this matter? Its 36% free cash flow margin and toll booth model really scream profitability. Jeff sees a 3 to 5 times upside here. So here's my take. Symbotic's a gem. Walmart's buy-in is huge, and honestly, AI-driven logistics is just a no-brainer for scaling production. But it's a small cap, so expect some volatility. That 3 to 5 times target is doable if Amazon or others jump on board, but competition's fierce out there. Now, Rambus is a slick play, lean, scalable, and tied to every AI chip sale. The memory wall's a real issue, and their IP is in demand. But hey, reliance on third-party manufacturers adds risk. The upside's plausible if AI chip sales really soar. The fastest gas in America? That's a natural gas firm, building LNG terminals in just 2.5 years, not 10, with $8 billion in income already. It's undervalued and set to lead U.S. LNG exports by 2030. And then, there's the cool kid on the block, a bonus pick that's cutting data center power use, which is just critical for efficiency. Why does it matter? Well, these round out the portfolio, hitting both gas or power and energy efficiency or transmission. The LNG play sounds a lot like Cheniere Energy, which is a real fast mover in a tight market. This isn't your typical stock-picking pitch, it's rooted in a macro trend I just can't ignore. AI's energy demands are real, and the US is scrambling to secure resources. The mix of stable picks like BWXT and TPL, and speculative plays like Symbotic and Rambus balances risk and reward, and, historical wins like Lockheed's 400% Iraq war surge show what's possible when capital floods a sector. The July deadline tied to Trump's AI plan adds urgency, though I'm wary of banking on unconfirmed policy moves. But here's the rub coals risky with green pushback, and the 3 to 5 times claims for Symbotic and Rambus assume perfect execution. The unnamed stocks and reports are a tease. Transparency would build more trust. Overall, it's a sharp strategy, but don't drink the generational wealth Kool-Aid without a plan to manage volatility. For $1,000 down from $1,425, you get 5 stock reports. 100-year-old money machine, Kohl's comeback, fastest gas, AI toll booth, and Cool Kid. Plus, you'll get weekly briefings every Thursday. Jeff's AI research, which is worth $5,000, is included. You'll also have live stream access to Porter's $5,000 conference. There's a year of asymmetry, a premium service with high upside picks, valued at $10,000. The package features an 8-section portfolio including forever stocks and insurance plays. And of course, there's a 30-day money-back guarantee. At $1,000, it's honestly a steal for high-net-worth folks who'd pay $10,000 for Wall Street research. The ongoing updates and asymmetry access really sweeten the deal. Porter and Jeff have a track record with Nvidia and Bitcoin calls. But for regular investors, $1,000 is pretty steep, especially without seeing all the stock names up front. The 30-day guarantee helps, letting you kind of test drive the reports. If you're serious about AI investing, it's worth a look. But only if you're ready to act fast and, stomach the risks. This isn't just about stocks, it's about where America's headed. AI's reshaping industries, from data centers eating up power to robots retooling factories. The US's resource edge, oil, gas, lithium, gives it a shot to outmuscle China, but it's not a slam dunk. Policy moves like drilling expansion and mining deregulation are real, but they face hurdles. Environmental pushback, labor shortages, global competition. Beyond stocks, AI could spark booms in real estate, like data center hubs, commodities such as copper and uranium, and even jobs for retrained tech workers. Risks? Plenty. Tariffs could spark market chaos. AGI's timeline is anyone's guess, and coal's a gamble in a green world, but the opportunity's massive if you play it smart. The big secret on Wall Street really nails the AI megatrend. Energy and production are the backbone of this race, and their stock picks are thoughtful, from BWXT's nuclear bet to Symbotic's robot revolution. The wartime narrative's a bit over the top, but it definitely drives home the stakes. At $1,000, the subscription's a bargain for serious investors, but don't expect instant riches. Check the reports, use the 30-day guarantee, and diversify to hedge the hype. The spice must flow, and with a clear head, you might just catch the wave.